Hello, everybody. Welcome to another episode of the Daily Dose. Today is Tuesday, January 31st, and we officially closed January in the green. A very positive month for January. You can see that the S&P 500 opened at around it was around 3840 for the year or for the month, and we closed at 4076.60. We're up 1.46% on the day today, and we're kind of approaching those 4100 level resistances again that have been pretty strong over the last several months. I do think a breach of that zone, that level, would be really big. It'd be another step for the bullish side. However, we are going to be hearing from Jerome Powell tomorrow, and that could have a very big impact on the market depending on what he says the central bank's plans are for the rest of the year, how much they see themselves raising interest rates by, maybe what their plan is for holding interest rates and possibly cutting them this year or next year. And we'll have to see. I kind of expect him to still be really hawkish. I think because the market is rallying, it will allow him to continue to be super hawkish and not really have to introduce this idea of cutting rates. I think that the Fed is still going to be focused on inflation. Inflation is still over 6% year over year. And that really is their goal, to get it back down to the 2% target. So there really is no reason for him to be dovish at all tomorrow, I don't think. And if we take past instances, the market usually does kind of sell off. So in some cases, it sells off pretty aggressively after he speaks. And I think it'll be really interesting to see what happens tomorrow, especially if he's really hawkish, because the market now truly is rallying. We're above our trend line. We're above the 200-day moving average again. We have all this momentum to the upside. I'm interested to see how that plays out tomorrow. So be sure to stay tuned for that. But that's what I'm looking at on the S&P 500. Obviously, if we do have a sharp sell-off tomorrow and we get back below this trend line, that'll be bad news for the bulls, good news for the bears. This would likely be a trap, a bull trap. We'd almost have like a triple top here at the 4100, and then we'd continue to go lower. So that would be kind of the bear case scenario. The bull case scenario would be that he doesn't pivot, but he kind of starts to veer away from his super hawkish rhetoric, that he starts to talk about their plan for unwinding these rate hikes. And something above the 4100, a close above the 4100 would be pretty significant for me on the bull side. So if we take a look at Bitcoin, it's actually been a little bit weaker than the S&P 500 the last few days. We're still below 23,000. We're at 22,959 right now on Bitcoin. But it is kind of still in this consolidation between anywhere from the 22,000 to the 24,000. And obviously, as we know, as we've talked about on this channel quite a bit, after a consolidation period like this, you usually do see a pretty big move either to the upside or downside. So I would be expecting that maybe even starting tomorrow or Thursday, depending on, let's say the S&P 500 breaks above 4,100. I'd expect to see Bitcoin move higher as well. And if the S&P 500 breaks down, we go back below that trend line, that bearish trend line, I'd expect Bitcoin to break down as well. But that's what I'm looking at. Be sure to stay tuned. Tomorrow, there's going to be a lot of things happening. The next 2 days, actually, we'll have obviously Jerome Powell speaking tomorrow, and then really big earnings on Thursday. You have Apple, you have Alphabet, you have Amazon, so that's going to be big. Be sure to stay tuned for that. Please subscribe on YouTube and follow wherever you listen to podcasts if you take any value out of this content. But I'll leave it there for today. Thank you for watching, thank you for listening, and I will see you tomorrow.